Why is NVIDIA stock up right now, and would it be a good time to buy? In this video, I'll be answering these two questions. NVIDIA stock is up almost 2,000% in the last 5 years, surpassing huge companies like Meta, Google, and now Amazon, becoming the 4th largest company in the whole world, making the CEO of NVIDIA, Jensen Huang, $10 billion richer. But will NVIDIA stock continue to rise, or will the bubble pop and drop in value? I'll be reading the reason for NVIDIA's massive success and answering if it's a good time to buy. So before I answer these questions, let's first talk on the massive company named NVIDIA and explain some key factors. First of all, NVIDIA provides cutting-edge technology. NVIDIA is known for its top-notch graphic technology used in gaming, AI, and more. Second is financial success. The company consistently posts impressive financial results driven by high demand for its products. NVIDIA also has key partnerships which only allows the company to expand and continue to grow. NVIDIA has teamed up with major players like Microsoft, Tesla, only expanding its influence, as well as market dominance with reliable high-performing GPUs. NVIDIA has become a leader in the market. It also has future focus, embracing trends like AI, autonomous vehicles. NVIDIA is set for continuous growth, and as artificial intelligence only gets to advance and grow, NVIDIA will only get to benefit from this trend, making the stock price rise in value over time. NVIDIA recently reported their company's earnings this month, and it's pretty impressive, and they just continue to break the record year after year. In fact, let's look at their earnings throughout the year starting from 2019 to the current year, 2024. So back in the year 2019, NVIDIA reported an 11.7 billion in revenue and 4.1 billion in profit. The following year, in 2020, NVIDIA had a 10.9 billion in revenue and reported a profit of 2.8 billion. In the year 2021, the company reported a 16.7 billion in revenue and 4.3 profit, beating the prior year. And in the year 2022, NVIDIA revenue increased, generating 26.9 billion and 9.8 in profit. Then the following year, in 2023, the company's revenue grew to $27 billion with 4.4 billion in profit. To fast forward to the year 2024, NVIDIA reported an insane 60.9 billion in revenue and a huge profit of $29.8 billion. NVIDIA has been growing their profit margins and revenue on a yearly basis, and as long as technology and AI continues to grow and evolve, NVIDIA will be right there with it, since after all, NVIDIA is a chip manufacturer, and since there's a chip shortage, NVIDIA won't go out of business anytime soon. If we take a look at NVIDIA's stock price, we can see that it is currently selling at $790.92 per share, and it is actually up 0.35% for the day and up 236.55% in the past year. But on the 5-year chart, the stock is up a massive 1,922.30%, which is just insane and out of this world. NVIDIA stock has a very small annual dividend yield of just 0.020%, which will be very small quarterly dividend payout amount of just 0.040 per share, which is not much, but hey, after all, NVIDIA stock is an amazing growth stock, and the rise in stock price will definitely make up for the very low dividend payouts, in my opinion. And this brings us to our first question: why is NVIDIA stock up? And check this out. So according to an article from the Morningstar, they state the following: over the past 2 years, NVIDIA has seen a 192% earnings growth so far, more than any of its peers in the Magnificent Seven. The strong growth has set the stock soaring. NVIDIA has been growing faster than Tesla, Amazon, Google, Microsoft, Meta, and even Apple. And as a result of this, the stock price is significantly in the green. This company's earnings report just gets even better and increases every year, which is why the stock has been on fire lately. And as long as the demand remains the same, NVIDIA will just keep increasing in value. This article states that NVIDIA stockholders could see a 96% upside in the following 2 years. Down below, we could read that NVIDIA stunned Wall Street last year, posting multiple quarters of record earnings. In the third quarter of fiscal 2024, the company's revenue soared 206% year over year to 18 billion. Meanwhile, operating income increased more than 1,600% to 10 billion. This right here is just bullish and great news for NVIDIA stock and for its holders. But here's the thing: there are 2 very important factors every investor should look out for in the near future. These 2 factors will heavily impact the performance of NVIDIA stock and will even dictate the future price of the stock. The first big factor is the next earnings report. If NVIDIA reports a negative or a declining revenue report, the stock price will likely drop significantly in value. But if it's a positive earnings report and NVIDIA breaks another new revenue record, the stock price will likely have another huge rally and just continues to rise and dominate. The next earnings report could make a huge difference for the stock price. If a company announces a good earnings report that beats what analysts expected, people usually feel more confident about the company's future and the stock price tends to go up. On the other hand, if the earnings are not as good as expected, the stock price may go down. Investors look at these reports to understand how well a company is doing financially and what its plans are for the future. The time when companies release their earnings report, also known as the earnings seasons, could be a bit crazy for stock prices as they react to good or bad news. So paying close attention to the earnings report helps investors decide whether to buy or sell a stock. So the next time NVIDIA actually reports their revenue is on May 2020. So make sure you save this very important date. The result of this will have a huge impact on the stock price and it will determine if it will go up or down. The last huge factor is a stock split. NVIDIA stock is getting way too big, which means a potential stock split may be in the near future. And a stock split could benefit a company by increasing the number of shares while lowering the price per share. This makes the stock much more affordable for individual investors and encourages higher trading volume and improves liquidity. It could also signal confidence in the company's future by attracting a broader range of investors. While a stock split doesn't change the company's value, it could lead to short-term price momentum and a positive psychological impact, as lower shares price are often perceived as much more attractive and affordable for investors. If you enjoyed today's video, then you guys will like this video where I reveal my top 5 AI stocks to buy right now. Who knows, the next NVIDIA might just be in there. Don't forget to like and subscribe for more.